Hello friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about GMM Pfaudler. Should you buy at these levels or avoid the company? Is there more downside left? So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about GMM Pfaudler, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts that I put up on short-term, long-term calls. And if you can pay for the first 10 months upfront, that is, you pay $100 upfront, you get 1 year access with a 20% discount. For detailed market or company talk, you can directly contact me on email. Now about the company. Established in 1962, GMM Pfaudler provides diversified equipments for various industries, especially to the pharmaceutical and chemical industry. Leading supplier of engineered equipment and systems, as I said, for the global chemical and pharmaceutical firms. And this is why this company has come into prominence post the pandemic in 2020 and surged so vertically over the last year or so, over the last 14-15 months. It has gone up 8-10x from those levels. Exports to global markets and will benefit with pharma in focus, with pharma doing well, with chemicals doing well. Currently, the market cap of the company is around 6 to 6,500 crores. If you look at the financials, then Q3 FY21 numbers, so these are Q3 numbers, December numbers. So sales were, you can say, up by around 30%, and profit was up by 10% only. High promoter holding is there, and it is a completely debt-free company. There have been some expenses, and due to which the profits did not soar exceptionally, whereas sales have grown pretty well. Return on equity of 20% and operating profit margin of 18% is considered robust, but it could improve going forward. And currently the valuations of the stock is not that steep. So after the run up towards 6,000 rupees, the stock has been gyrating between 4,000 and 4,300 for the best part of last 2 months. If you look at the performance of the stock, has been 4x in the last 2 years, as I have explained, from 1000 to 4000 and all that, but has come in focus as pharma has come back into demand, and we have seen how that has happened from 2020 April. It has been a year, and look at pharmaceutical stocks surging from those levels that were there, say in 2020 April. Valuations are currently stretched at around 70 times, and that is where probably the stock is having a time correction rather than a price correction. So it is staying at one level and probably is getting ready for a larger up move later on. Results have been robust even in difficult times. Results have done well, and when demand was stretched, then results have come out brilliantly. Strong promoter holding at 75% is a huge positive for the company. Completely debt-free company is GMM Pfaudler, and return ratios are very decent. This is one of a kind of a company. So I brought to you Happiest Minds yesterday. This is also something that is in a completely niche category, that you rather buying all the pharmaceutical companies, you can just get into this company which serves all the pharma and chemical players. But one thing you need to note here is that they are like ancillary to these pharma companies, etc. So probably pricing power will not be there with companies like GMM Pfaudler. So why it is a preferred pick among all the, say, mid-cap owners around India? So pharma and diagnostic ancillary company is probably in complete demand with the kind of situation that we are living in at the moment, and this could just continue for the next 2 to 3 years. So this pharma rally, whatever the demand in the pharmaceutical industry especially and in the chemical industry, could just continue for the next 3 years. So long-term prospects look very positive, and 3 years is a quite a decent time frame to look at when you consider investing into a company from here on in. And you have to remember that it has been 1.5 years already in which the stock has performed exceptionally well for their investors. So it would end up being a 5-year story. Current uncertainty is also helping such stocks. So stocks in the diagnostic kits division stocks in the pharmaceutical, stock in healthcare, hospitals. You have pure diagnostic plays like Dr. Lal. Everything is doing extremely well, and this is because we don't know how far this pandemic would continue. And it is a sad probably thing of affairs that what is happening on the ground, but uh, we have to look at where the companies are getting benefited, and these are the stocks that are getting benefited and could continue to do so probably in the next 2 to 3 years. It is a direct play on all medical domain. So rather than looking at hospitals, diagnostic kits, etc., you can just look at this company which provides something or the other to all sorts of such industries. Strong numbers and margins over the years has also helped the company do well, and the management has had that issue earlier when they had the buyback or something at a lower price, at a discount to what the stock price was, and then the stock fell and it has not recovered since then. But otherwise the management has done exceptionally well, that the company has done so well over the last 2 years. As the opportunity arrived, the company has done exceptionally well. Strong numbers and margins over the years has also helped. And remember that such sort of companies are extremely limited. I keep pointing that out, and that is why these companies command the premium. You look at Dixon commanding that premium, you look at Bajaj Finance in their early stages commanding that, you look at Happiest Minds at this point of time, you look at mid-cap IT, some of the other mid-cap IT companies commanding the same kind of premium. You look at DMart at 30,000 crore market cap, also commanding a very huge premium, which it is doing even currently. So these are niche players in their domain, market leaders. This is also a market leader in its domain. Numbers are extremely strong, and that is why the company has been doing well, and that is why the stock is not falling even after, you can say, subdued numbers for the December quarter. If you look at the technicals of the stock, then there is strong support around the 3800 4000 levels. In fact, around these 4100 4200, these are very attractive levels to buy into the stock, because very little downside, probably 5 to 7% downside, and you can have a good 40 to 50% upside if things really get going again for the stock. The only thing is it could still take some time, because the stock has surged vertically over the last 1 year from virtually unknown, you can say, commodity, unknown stock to something that everybody wanted to own at 6000. So it is having a time correction which could just continue, but otherwise 4000 to 4200 are very good levels to these levels are very good to get into, and once 4700 is taken out, we'll see a huge surge in the stock, maybe new all-time high. So current levels and on decline, this is a good stock to buy. Have a 3 to 4 year time frame and you will do well in this company. So what needs to be done? Can be bought on major declines and at current levels as well. It should be a good long-term play, as it provides to all the pharma and chemical companies, and as India is becoming a chemical hub as well as a pharma hub with whatever is happening to China, this could be a good long-term 3 to 4 year play. Market cap is still small, which is a positive, because such kind of business could command easily 15 to 20,000 crore market cap market cap, and have less than 5% exposure into such stocks. So this was my video on GMM Pfaudler. Please like and subscribe my channel, hit the bell icon so you can get my videos straight away when I post it. Thanks a lot for watching.